With market capitalization of $3.4 trillion in September, India is the world's sixth biggest stock market. India has overtaken France for the first time in market capitalization. The combined market value of all listed companies, referred to as market cap, has seen a sharp rise due to dazzling rally in equities in past 1 year. The euphoria is not just limited to listed entities. The scrips of unlisted companies too have surged. Consider the case of the National Stock Exchange. While the IPO of NSE may be some time away, the stock price of NSE shot up to 2,300 rupees per share in May in the OTC market and has further risen to 3,100 rupees in recent months. While the leading stock exchange is commanding a staggering valuation of over 1.5 trillion rupees, the listed peer BSE's market cap is just 5,574 crore rupees currently. Is the relative low valuation of BSE justified? Before getting into valuation, let us first look at the merits of the business model. The value of listed firms typically moves in tandem with economic growth. Hence, India's march towards a $5 trillion economy will be reflected in the performance of its stock markets. Indian exchanges synonymous to equity markets will continue to gain scale and depth. BSE will be one of the beneficiaries of the growth in equity markets, both primary as well as secondary market. In addition, exchanges have unique and durable business model with high entry barriers. Also, a large portion of the exchange's revenues are recurring, which gives stability even during uncertain times. After the initial setup, there is no major capex in the life cycle of the exchange. It also enjoys negative working capital in the form of client margin money. The exchange's business model also offers high operating leverage as large chunk of operating cost is fixed in nature. NSE continues to be the invincible leader in the equity segment, both cash and derivatives, with more than 90% market share. BSE's efforts to recoup market share in the equity segment have experienced little success. However, we are encouraged by BSE's foray into new segments where it is fast gaining traction. For instance, BSE Star MF is the largest mutual fund distribution platform. Total transactions to Star Mutual Fund grew by 90% year-on-year in Q1 FY22. BSE's market share in segments other than equity trading like commodities, INX, SME listing is respectable. But except for Star Mutual Funds, other segments are still in nascent stage and are not yet contributing to the revenues. However, we do expect them to translate into revenue at a future stage. In a duopolistic market, we see BSE to be beneficiary of buoyant capital market conditions. Hence, despite being distant second player in equities market, we expect BSE to earn substantial revenues from increasing market size even if market share does not move much. We see multiple growth drivers such as increasing financial savings, rising retail participation in equities, healthy inflows from foreign investors, and buoyant primary market with more companies getting listed to support trading volumes. We are particularly enthused by traction in the small and medium enterprise, listing segment and mutual fund distribution platform. At present, information services constitute 5% of BSE's operating revenue and can rise with big data implementation. Information services generally accounts for 10 to 25% of total revenues for exchanges in developed economies. Annuity kind of business with high operating leverage, strong cash flows, and high dividend payout makes BSE a unique proposition. The stock is currently trading at 9.5 times estimated core earnings for FY23, which is attractive in the light of BSE's financial strength and future growth levers. NSE's IPO could be a trigger for stock re-rating. BSE offers a value proposition of low risk and high return potential, making it a worthy buy.